Representative Dale Kooyenga's plan to cut income taxes for everyone in the state has drawn some harsh criticism. His plan cuts income taxes by $752 million through tax rate reductions across the board. Senator Chris Larson said it's, quote, overwhelmingly for the wealthy.
The criticism is that this is going to be a tax cut for the rich. And we have spent a lot of time and effort to make sure that this is a tax cut for the middle class. Why? Because it's the middle class that drive an economy, and it's the middle class that are shouldering this heavy, heavy burden. We just talked about Illinois. Now, Illinois millionaires, which is considered a bad state for taxes, Illinois millionaires pay less of a rate in taxes than Wisconsin's lower income middle class families. When over 50% of our tax revenue comes from the top 10% of wage earners, it is nearly impossible to create a tax reform or tax cut that is not going to disproportionately lower taxes for upper middle class and rich taxpayers.
Representative John Richards wrote in a press release, "We should be taking a balanced approach that prioritizes public education and targets tax cuts to the middle class."
What this represents is a very responsible plan that is priced at a level where we still have plenty of money that we could give money to our education system, and we could also meet other priorities out there. So by no means does this tax package grabs all the revenues that's all for taxes. I mean, I think that there was pressure to do that from some folks, but this is meant to be a very realistic plan that balances the fact that we still want to support a first-tier education system, but we want to get out of the bottom 10 with tax burden as well.
Representative Gordon Hintz said, instead of creating a state budget that invests in our future, Republican leaders remain committed to spending one-time money on permanent tax cuts at the expense of Wisconsin's economy.
Historically in this building, the way tax cuts has been done is tax cuts have been pushed into future years so that other bodies have to pay for those tax cuts. This is the first tax cut that's done in decades that is fiscally responsible. It is paid for based on the economic growth that this body has created over the last 2 years of our strong reforms. And the structural deficit that's created is very manageable to eliminate with the same growth that we've seen over the past 2 years. So this is fiscally responsible, but it's the most responsible thing to do for Wisconsin working families and businesses.
The Joint Finance Committee is expected to finish its work on the budget next week and has not yet addressed Kooyenga's tax cut plan. For the McIver Institute, I'm Bill Osmolsky.